Welcome to the world of cryptocurrencies, where news turns into opportunities and markets are constantly in motion. Are you ready to explore the latest developments and hottest trends in the industry? This is your gateway to the latest cryptocurrency news. Join us as we break down the latest developments, market insights, and game-changing innovations. Don't forget to leave a like and subscribe to stay updated. The only thing bulls and bears agree on is that Bitcoin and other cryptocurrencies or tokens will likely go up before having a significant pullback, or will have a pullback now. But then get up. What is your overall vision? Do you have some kind of one-year Bitcoin core? What is it based on? So I think a lot of the discussion about a potential pullback in the market is centered around when the rewards for your blockchain miner and Bitcoin miners actually reduce by 50%. The reason people assume this change could be profoundly significant for the European market. What is interesting, however, is the persistent hesitation within the UK market regarding giving retail investors access to such assets traded in this way. What distinguishes Europe from the US, and potentially the UK, is its approach to whether institutional money takes precedence or whether easier access for retail investors is favored. We observed a diverse spectrum. Europe, including Switzerland, has long welcomed both private and institutional investors. That's been our main focus for the last 5 years as we've brought these products to market. The situation in the United States, however, is somewhat different. In the United States, it is still early days for major institutions. They typically undergo a 90-day evaluation and due diligence process before considering product listings on wire homes. This phase has just begun and the adoption cycle is still in its early stages. We expect a similar trajectory in the UK. Sell-off event, as I think was predicted, primarily because it's not as impactful from a purely numerical or accounting standpoint as it would have been in previous market cycles. I think looking long-term, I see quite a bit of upside. There are issues that, while they may introduce some short-term turbulence, further limit the supply side of this market, which ultimately, as long as demand continues, should be a positive indicator of price action. Sell-off event, as I think was predicted, primarily because it's not as impactful from a purely numerical or accounting standpoint as it would have been in previous market cycles. I think looking long-term, I see quite a bit of upside. There are issues that, while they may introduce some short-term turbulence, further limit the supply side of this market, which ultimately, as long as demand continues, should be a positive indicator of price action. Over time, we expect to see a gradual increase in retail participation. However, it is still early for retail involvement in the markets. I found Caroline's question particularly interesting because it highlights our ongoing commitment to understanding both the short and long-term factors at play, particularly as they relate to Bitcoin. I often find myself studying the charts on the weekend. With Bitcoin trading 24/7, Sundays tend to feature momentum-driven trades at the start of the new week. Reflecting just on recent developments over the last 4 or 5 days, it is evident that institutional adoption in the United States is gaining momentum. Although it is still in its early stages, not all institutions or brokerage firms have embraced Bitcoin yet. However, there is a notable shift in the Bitcoin market structure, particularly towards weekday trading. This marks a shift away from its historical dominance by retail investors and focus on Asian market schedules. Growing institutional participation, largely driven by ETF flows operating during US trading hours, is reshaping Bitcoin trading volume dynamics. When it comes to the data sets I rely on a daily basis, I prioritize on-chain fundamentals and metrics over spot prices at any given time. While spot prices provide immediate information, they can often be affected by noise. In contrast, on-chain metrics offer a deeper understanding of the dynamics of the blockchain ecosystem and provide valuable insights into the actual activity occurring within the blockchain network. In fact, the parameters you mentioned serve as the basis for one of the products we operate in. In the US, we are transforming these parameters into an ETF, highlighting their importance in our analysis. These metrics, which I usually focus on, have become increasingly intriguing amid the Bitcoin exuberance. Bitcoin's dominance has undoubtedly consolidated, but we have observed a rising tide that has lifted all boats to some extent. The emergence of meme coins, some related to politics and others gaining traction for various reasons, exemplifies this trend. While Bitcoin remains a focus, we also offer exposure to a wide range of assets, including Tesla, Avalanche, and Uniswap. In terms of market interest, there has been considerable appetite to venture beyond Bitcoin and Ethereum. The recent increase in demand for Bitcoin, particularly with the introduction of US ETFs, could extend to Ethereum as the regulatory landscape in the US evolves. Beyond these two major cryptocurrencies, we have seen a significant increase in demand from both institutional investors and the broader market. Our company stands out in this regard, offering a comprehensive suite of approximately 40 products covering various assets outside the US market. What is noteworthy is the growing interest in the broader spectrum of blockchain applications, driven in particular by some of our largest customers who are now re-evaluating blockchain adoption from a new perspective. Solana stands out as a prime example, attracting considerable attention in recent months. As the consequences of unexpected events ease and uncertainties dissolve, attention shifts to cascading parameters, revealing intriguing developments within these communities and ecosystems. Institutional clients, beyond simply looking for a store of value, are now exploring the utility aspect of blockchain technology. Unlike retail investors driven solely by speculative motivations, institutions are more interested in understanding the changing dynamics and practical applications of blockchain. They are interested in how these technologies are reshaping industries, what drives their use, and the tangible utility they provide. This marks a significant departure from previous market cycles and is indicative of the growing institutionalization of the space, which is poised to have a profoundly positive impact. It's worth noting the changing conversation on social media platforms, where references to Bitcoin's new highs often elicit responses that reference traditional headlines. This shift in dialogue highlights a broader trend of institutional interest in diversifying beyond traditional assets into the realm of cryptocurrencies and blockchain-based investments. The consensus between bulls and bears in the cryptocurrency market revolves around the likelihood of Bitcoin and other cryptocurrencies experiencing bullish momentum followed by significant pullbacks. However, there is a difference of opinion regarding the timing of these pullbacks. From a broader perspective, what are your prospects for next year? And what factors inform this perspective? Much of the discussion around a potential market pullback has centered on the concept of a halving, whereby rewards for Bitcoin miners are reduced by 50%. It is assumed that this event is already priced into the market, leading to potential overbought conditions and consequent sell-off dynamics. However, I believe the impact of the halving may be overstated in current discussions. The relative size and significance of the halving event compared to the influx of institutional flows into the market may not lead to the expected sell-off. In previous market cycles, the halving event might have had a more pronounced effect, but now its impact may be less significant. Looking ahead, I see significant upside potential for Bitcoin and other cryptocurrencies. While the halving event may introduce short-term volatility, it ultimately further constrains the supply side of the market. As long as demand continues to grow, this should serve as a positive indicator for price action. The trajectory of increased institutional adoption, particularly with the introduction of US and European ETFs, alongside broader international investor interest, is crucial. I expect this trend to drive continued upward price momentum. Overall, I maintain a bullish outlook for the coming year, expecting further appreciation in the cryptocurrency market. Thank you for joining us on this journey through the world of cryptocurrencies. If you found this overview useful, be sure to leave a like and subscribe to our channel so you don't miss any of the latest news and updates from the world of cryptocurrencies. Continue to explore, learn, and invest wisely. See you next time.